Welcome to Michigan Condo Voices. Let's get into today's episode.
Hi everyone, I'm Stephanie with Michigan Condo Voices. Before we begin walking through an HOA operating budget, let's make sure that we're all speaking the same language. One of the biggest reasons HOA budgets can feel overwhelming is because they contain terms that are not part of our everyday vocabulary. The good news, you don't need to be an accountant to understand your community's budget. You simply need to understand a few key concepts. Think of this video as the prerequisite for the Budget Autopsy series. Once you understand these terms, the numbers will begin to make much more sense. Let's dive in. Let's start with the absolute baseline. Line items. Think of a line item as an individual building block of the entire budget spreadsheet. It is just a single specific category of revenue or expenses listed on its very own row. For example, you might see line item 5200, snow removal. When you know how to read individual line items, you stop guessing about the numbers and can ask highly targeted questions about specific vendor costs. When you stack all those line items together, you get your operating budget. This covers the day-to-day costs of running your community. These are the predictable, routine expenses necessary to keep the association functioning month after month. Think of it as the community's annual spending plan or its daily checking account. Your operating dues go directly toward everyday essentials like utilities, property insurance, landscaping and snow removal, payroll and property management fees, pool and common area maintenance, and legal and accounting services. The day-to-day costs are half the story. The reserve fund is completely different. Think of this as the HOA's long-term savings account. Reserve funds are money strictly set aside for massive, infrequent repairs and replacements that only occur over time. A healthy reserve fund safely prepares communities for future structural expenses like total roof replacements, road resurfacing and paving, major plumbing infrastructure, and complete clubhouse or pool reconstruction. By saving a little bit over time, a community is prepared for big projects instead of heading co-owners with sudden, stressful special assessments. So how does money get into the savings account? That brings us to a term you'll always see listed in the operating budget, the reserve contribution. This simply refers to the specific portion of money being transferred from the operating budget directly into the reserve fund. In other words, today's operating income is actively helping to prepare for tomorrow's major repairs. Understanding this exact relationship is one of the most vital concepts in HOA budgeting. Now let's talk about tracking reality versus the plan. Once the budget is set, we have to look at how money is actually spent, which introduces the term between budget and actual spend. The budget represents what the association expects or plans to spend over the year. The actual financial statements reveal what was really spent. Remember, budgets are just plans, while monthly financial statements document the real results. Both are equally important to watch. To track the relationship between those two numbers, we use a tool called variance. The variance is simply the mathematical difference between what the board planned to spend versus what they actually spent. Here's how to read it on a report. Favorable variances indicate the community spent less money than expected and is therefore under budget. Unfavorable variances indicate that the expenses came in higher than expected, which means the association is over budget. Surplus versus deficit. At the end of the fiscal year, adding up all of your variances tells you the ultimate financial health of the association. Surplus. The association collected more total revenue than it spent. This extra money is usually rolled over into the next year's operating fund or cleanly transferred to reserves. Deficit. The association spent more money than it collected. A deficit requires the board to pull from emergency contingency funds, raise future dues, or pass an assessment to balance the books. Moving on to evaluating the accounting bookwork. Reallocation. Sometimes money budgeted for a specific purpose simply isn't spent. Perhaps planned flowers were not planted, a minor project was delayed, or a vendor contract came in under budget. That naturally raises an important question. What happens to those leftover funds? Are they spent elsewhere, transferred to another operating expense, moved safely into reserves, or left completely unused? Understanding how funds are reallocated helps co-owners ask thoughtful questions at meetings without making negative assumptions. Another concept to keep in mind is misclassification. Expenses should generally be recorded in the specific category that best reflects their underlying purpose. Occasionally, you might see an expense appear in a category where co-owners would normally expect to find it, but it is a perfectly reasonable opportunity to politely ask, could you help us understand why this specific expense appears under this category? Dynamic transparency always begins with a good question. Reclassification. This happens when an expense is initially placed in one category, but is later moved to a different one to improve accounting accuracy or fix an entry mistake. You might notice an expense shift between line items or disappear entirely from a category where you originally saw it on a previous report. Paper balance versus cash. One of the single most misunderstood concepts in HOA finance is the difference between a paper balance and available cash. Financial balance sheets often display account balances that include uncollected receivables, like unpaid dues from neighbors, pending transfers, or accounting adjustments. That means a healthy number on paper doesn't always equal the exact amount of cold, hard cash sitting in your bank account, ready to spend. Keeping this distinction in mind keeps your financial interpretations accurate. Finally, always remember that budgets only tell part of the story. Supporting documentation is what actually provides the missing context. If you want the full picture of your HOA's financial health, look past the spreadsheet rows and request to look at professional reserve studies, signed vendor contracts, board meeting minutes, past audit reports, and year-end financial statements. These documents help explain why certain amounts appear in the budget. As you can see, understanding an HOA operating budget isn't about memorizing accounting terms. It's about learning enough to ask thoughtful questions. In the next video, we'll begin walking through an example HOA budget together, section by section. We'll start with where the money comes from before moving into expenses and reserve funding. This is Michigan Condo Voices. You are always welcome here. Take care, everyone, and thanks for joining me.